Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading, and welcome back to another weekly watch list video. We're going to go over everything that you need to know for this week ahead. So, getting right into it. Before I do, hit the thumbs up for the video, and let's start with the earnings for the week. So, this is where it's all going to begin. Q2 earnings season is here. I know a lot of you are probably like, we've had earnings, nonstop. How is this any different? Well, this is the start of Q2 earnings season. Okay. Starts here on Wednesday with the airlines. And then Thursday, you have the banks that start up, and Friday, more of the banks. The banks and the airlines, they always start earnings season. What we're going to be looking for in this earnings season is what they're going to be saying about Q3. So the guidance, how inflation may be hitting their profit margin. These are the things that we're going to really want to pay attention to. And how many CEOs say recession is a real possibility. Okay? That's going to drive the market. Earnings are going to drive the market. So this is super important. All right? Economic calendar for the week. Ridiculous week we have coming up. So this is not going to be, no week is really easy to trade, but this is going to be even harder. You have the CPI on Wednesday. That's the Consumer Price Index. Absolutely monster inflation gauge for the Fed. You have on Thursday the PPI. Huge. And then on Friday, we have the University of Michigan Consumer Sentiment Index. This is something that the Fed keeps a very close eye on as well. So you have earnings season kicking off. You have an economic calendar jam-packed with inflation data. So not going to be easy. All right. And now let's take a look at the bonds. Right here, you have the 2-year at 3.10. You have the 10-year at 3.08. All right. That is an inverted yield curve. Every time we have seen recession, the 2-year has been yielding more than the 10-year. That's all that means. It's an inverted yield curve. While this doesn't have to predict recession, we're starting to see these moves really start to invert. So keep an eye on that. And if we go over to our FinViz, this is something I showed you guys on last week's watch list. What was the biggest performer for the week? Communication services, consumer cyclical, technology, healthcare, financials, finally in the green a little bit. That's good to see because those have been beaten down. Utilities was a big winner last week, but it held in there. So for the week, basically unchanged. Now, after a huge week to have utilities unchanged, it's still holding up. They don't just always just go straight up forever. So that's something, these are going to continue to be on my watch list. Financials is going to start to be introduced onto my watch list. So, technology, a lot of these markets, I'm going to show you in a little bit, they're all going to be coming into heavy resistance. So how price acts at those levels is going to paint a huge picture. Just something to keep in mind. Now, let's go over to our compass, the SPY. All right. This is where we dive into the charts using technical analysis. Nobody can tell you where the market is going. I don't care how good they are. All we can do is using technical analysis, using a few indicators, looking at a big time frame and some trend lines and some historical patterns. So we had a 9% move up from the bottom here. We had another 9% move up from the bottom here. And now a 9% move up from the bottom here would bring us right into this resistance. You have a trend line. You have the 50-day moving average on the SPY. So while we have seen some nice gains recently, and you have a triple bottom here, we've seen that breakout of the 20 EMA, all very, very good stuff, but we're going to be coming into resistance. How does price react here? So much on the charts is going to be, really important this week, especially with a lot of economic data and earnings season starting up. So this is just something to keep an eye on. It was nice down here because you had some room. Nice down here, you have some room. Now you're running out of room. We've been on a downward trajectory all year long. So until we break out of this trend, you gotta, be a little bit cautious this week going directly into resistance. And that's going to be the same thing on the Qs. We're coming up to resistance. Now, while it was great that we broke out of this trend, now we're getting to that 50-day moving average. So we're going to want to see this break for continued technology stocks to really move. So far, so good. We're putting in higher lows, and now we're starting to make higher highs. That close on Friday was the highest close since June 9th. So a little bit over a month, and that's the highest close so far. That's a great sign if you're bullish, but keep in mind, we're still going to be running into a lot of this consolidation up here, the 50 moving average, just something to be aware of. If we want to back out, look at the weekly chart, and all we're doing is consolidating. On the weekly chart, on the SPY, all we're doing is consolidating. So we've seen this before. We've seen the consolidation and then more of a sell-off. So we need to break that trend. Basically, for the past month, we've been trading in this range here. So a lot of choppiness, a lot of choppy trading. It hasn't been easy at all. And then we go to the Dow Jones Industrial. This on the daily chart. Zooming in, we're seeing a lot of support down here. So like we've seen, we're making higher lows. Right when it comes back down into demand and then coming back up, very nice. On Friday, you have a doji candle. So this is a candle of indecision right here. The Dow Jones just did not know which way to go. We need that break. We need to close higher than our pivot point right here. And the 50-day moving average is sitting at about 320 on the Dow Jones. We're making, lower lows the whole year, lower highs the whole year. So right now, you still have to be playing defensive. But this is the way a bottoming starts to look. So it's a good sign, but until we get, really bullish, we're going to have to wait for those earnings to come in. It's as simple as that. So many investors are waiting for those earnings to come in. So, and a lot of stocks, if we look at this on the daily chart, so many stocks are coming into resistance. Now, Apple was one of our calls from last week. When we made the video here, we were saying if we break this resistance, we can shoot up to the 50 moving average and then eventually the 150 area, which would be the next area of resistance. A great breakout. So that was really nice to see on Apple. But this week, now we're going to be coming into more resistance. On the semiconductor ETF, same thing. We're going to be coming back into resistance at the 20 EMA, where we have been rejected before. So keep an eye on that. On Starbucks, same thing. We're coming into resistance. This area we could not break yet. Now, this is going to be one of my stocks on my watch list, and I'll get to that in a second. I just want to show you guys a few more really big weighted stocks that are going to be coming into resistance. So down here for the past 2 weeks or so, there was more opportunity to go higher. Now, as we run into resistance, there's now more opportunity for the market to maybe trade sideways for a little bit or even get rejected. So that's the way that these charts are working. They've been working like this all year long as we come back into resistance. Another one was Home Depot. Home Depot is coming into this resistance. Nice bottoming here and starting to break out, but you have the 50 moving average, which has been resistance the entire year. And that's at 290, which is only about $4 or $5 higher than the close here. So just keep an eye on a lot of these stocks that hold a big weighting on the overall market that are going to be coming into resistance now. So we did have a solid week in the overall market, but these are just some things that we need to keep an eye on. So let's start with what a bottoming pattern looks like. XBI has been on our Sunday watch list for so long. I had shown you guys this one. We had this bottom from COVID, and then we had a bottom, double bottom here in 2022. This broke out of resistance and is now seeing very, very nice gains. So you're over the 50, you're over the 20 EMA. The next spot on this one should be about the 200 moving average, but it is very overbought on the RSI. Just keep that in mind. Sometimes when they do this, they have to slow down for a little bit before they move higher. But XBI, this is what a bottoming looks like. You go up a little bit, you come back down, you retest support, and then you get that move up. So XBI, this is what I'm kind of looking for on XLF. These really, really, oversold, ETFs. So this one is the financial ETF, the bank stocks. And all the bank stocks are going to be reporting their earnings this week and next week. So bottoming out, and now we're starting to make a move. The 20 EMA has been resistance. I want to see this break. All right. We've seen some nice demand down here by these candlesticks. If we can get that move, then you have the move to the 50-day moving average, which is also the next area of resistance. But you might be able to look at specific stocks in here, like Bank of America, really oversold for the year. This one can have a chance to break out if it can break the 20 EMA and then a move up to the 50. So, maybe you can find some of these stocks that look like they're bottoming out. There's a lot of consolidation down here. This is buying low and then you can sell high. So, keep some of these bank stocks on watch. XLU, this was on our watch list last week. We saw huge moves up because it was one of those sectors that we had shown in FinViz that had a very, very nice week before that. It pulled on back. It's consolidating over the 200 moving average. And now I want to see maybe another leg higher for XLU. That is also on my watch list. And then we have Pfizer, which is trading in a very specific channel. Got rejected to the penny up here. We might be headed back down. We did have nice support here. We have all three major indicators under us, which is very bullish. If we can get a breakout of this, maybe we go back to those highs that we saw. But right now, until we get the break of this trend, there's no reason to get long. So we have to wait and see what happens here. So just another chart to keep on watch. Some more stocks just setting up and, waiting and seeing what happens first instead of gambling before we get that confirmation. Starbucks. This one was on our watch list. We had this trend line for the year. We broke out of it, and then we retested this double bottom. This is what a bottoming looks like. You saw the same thing on XBI right here. We're coming into resistance. We can't break out of here. If we can get the break, this is going to be a very, very nice trade. So SBUX, Starbucks, it's holding up nicely. We want to look for that flat top breakout. So that's why Starbucks is on our watch list. And then I'm going to show you guys Google, because Google has their 20-to-1. And that's happening. That stock split is happening on Friday. We started to break this area here of resistance. Now you have a move possibly up to 2,500, which is where we had support for most of the year. Came back down, and now it looks like it's starting to break ahead of this split. We've seen after stock splits so far this year, the stocks haven't really reacted that well. Not like in 2021, where when things would split, it would just go to the moon. So just keep that in mind. We are still technically at resistance here, because right here at on June 6th, we had a top here. So let's just put this in right there. We want to see this break. It's still the highest close in over a month. So Google ahead of the stock split. Keep this one on watch. If we can break out once the stock splits, we can see a nice move on it. But right now, we're still kind of in this consolidation. And if we back out on the weekly, you can see that's all we're doing, consolidating. This is what Google does, consolidates, makes a big move, consolidates. Where do we go from here is anyone's guess. But this is just, showing you guys the technicals and then some fundamental news here with the stock split. We'll see what that can do for the stock. Doesn't change the valuation, but it can, since it makes it cheaper for people to buy, it could grab some retail investors in there. So that's Google. And I think that's basically going to be it. Just keep in mind, Wednesday, CPI, earnings season. Keep your ears open. Keep your eyes open. Listen to what the CEOs say about recession fears, inflation. This is really going to move markets. And, you know, this is where it all starts. CPI Wednesday, PPI Thursday, consumer sentiment Friday, earnings season Wednesday, Thursday, Friday, banks. So there's a lot to really digest here. I hope you guys enjoyed this weekly watch list video, and I'll see you back tomorrow with another one. Take care, guys.